We see Nvidia shares down about 1%. How meaningful is this, at least in the near term, for Nvidia sales? Because we keep hearing that Chinese sales, they weren't really factored in the guidance. So why is the stock moving like this in the pre-market?
Yeah, look, it's a shot across the bow, obviously from Beijing. But look, part of the issue here is that, and we see it, all the big Chinese tech players, they're going to want NVIDIA's chips, right? I mean, there's one chip in the world fueling the AI revolution, but it speaks to this sort of balance that you're going to have to see. A lot of sort of regulatory scrutiny. But when it comes to, look, when you look at the upside, how you get to a $5 trillion market cap for NVIDIA, China is a key part of that story. But I believe here the bark will be ultimately worse than the bite.
All right. I know this is just crossing again. China's biggest internet regulator is telling domestic firms to stop buying NVIDIA chips, terminate existing orders. According to this FT article, Beijing, this is their words, they summoned domestic chip makers, including Huawei, Cambricon, and Alibaba and Baidu, and kind of tested those chips and found they were at least comparable.
NVIDIA's stock is down around 1%. How significant is this for NVIDIA sales, at least in the short term? We keep hearing that the guidance didn't really take Chinese sales into account. What is the reason behind the stock's pre-market movement? Indeed, it's a clear shot across the bow from Beijing. However, one of the problems here is that you will want NVIDIA's chips. As we can see with all the major Chinese tech companies, the AI revolution is being fueled by a single chip worldwide. However, it highlights the need for a certain balance and extensive regulatory scrutiny. Regarding the upside, however, and how NVIDIA reached a market valuation of about $5 trillion. China plays a significant role in that narrative. However, I think that in this case, the bark will ultimately be worse than the bite. Okay, according to this FT article, China's largest internet regulator is advising domestic companies to stop purchasing NVIDIA chips and to cancel any current orders. Beijing, well, just what they said. After calling in local chip manufacturers like Huawei, Cambricon, Alibaba, and Baidu, they conducted some testing on the chips and discovered that they were at least on par with those made by NVIDIA. Although it just crossed your mind, have you heard anything similar about chips that are at least comparable already coming out of China? Though perhaps not on the same level, they are comparable. Yes, Frank, they are similar. For example, in September, I'll be playing in the Bethpage Ryder Cup. The point is that NVIDIA is like years ahead of these other companies. Look, that's the truth, isn't it? Looking at these Chinese tech words, you can see that they want that NVIDIA chip because of some grandstanding that's going on. That's fresh oil or gold. Look, that's just one of the challenges Beijing will face in this situation. Recall that the Trump administration is aware that NVIDIA chips are the largest player on their poker table. Okay? So we're going to watch Eunice Yoon live on the CNBC Newsline in Beijing right now. Good morning, Eunice. Could you let us know what you're hearing recently from China? What if you had a warning from your desk before your retirement was erased? Your retirement account could be wiped out overnight if you don't purchase this product. The supply is limited to 100 pieces, so order yours right away using the link below. Frank, according to this FT report, China's cyber watchdog is directing local businesses not to use a cutting-edge NVIDIA chip that is used in automated manufacturing. The RTX Pro 6000D is the name of this. According to the newspaper, this is because the regulators want Chinese companies to use chips that are similar to those made by Chinese companies, such as Huawei. This chip was introduced in July by Jensen Huang while he was in Beijing. What's intriguing, in my opinion, is that this report comes after regulators claimed earlier this week that NVIDIA had broken antitrust laws. Furthermore, it follows similar government pressure to discourage Chinese companies from using NVIDIA's H20 after the Trump administration modified its regulations and permitted NVIDIA to sell them this summer. Right now, I want to examine Chinese internet stocks. They're getting a lot higher. Now, some of this is based on reports that Baidu's AI business is improving. In fact, a U.S. company upgraded them this morning. The last time I looked, those shares were up about 8%. Additionally, Alibaba is rising, just based on the news. Is the fact that Beijing, at least, claims they can produce chips that are comparable and that they plan to increase their reliance on their own. AI and tech industries encouraging for these Chinese internet stocks, at least for today. Yes, Eunice was also making excellent points about how this is good news for Chinese tech for the domestic players. It is also a part of our perspective. We are optimistic about Baidu and Baba because, look, they will still receive a sizable portion of what is happening in China when it comes down to it. But notice, we're not alone in this AI revolution. China is where it is. Naturally, Nvidia will be very important in this. However, this is very good for big tech in China. Today we'll see an increase in those stocks. Well, those shares are roughly 2.3% for those listening who are currently viewing Alibaba. Baidu is up roughly 8.5%. PDD Holdings is currently up roughly 2.25% as well. Observing some positive developments regarding those names, I want to change things up a little. There are numerous American tech executives in the UK with the president discussing investments in general. We ran out of time, but I believe I have a question for you that is comparable to the one I would have asked our UK reporter. Why the United Kingdom? Why now? What happened suddenly? I believe that if you look at Google, Oracle, Microsoft, and other companies, you'll see that they're trying to plant the flag, right? In terms of the belief that if there is an opening for it, that hasn't really been a problem in Europe. Everyone is attempting to determine who will receive a larger share there, after all. Additionally, I believe that market is beginning to open up. Over the past week or two, we've noticed a lot of changes. However, why the UK? Why not Europe? You also have SAP, which is of course the largest tech company in Europe. Why are UK regulations receiving so much attention? I mean, Big Brother Watch is currently the EU's biggest issue. It's difficult, really. I know a lot of tech startups that are relocating to Asia and the Middle East, thus the UK. It's there if you're trying to establish yourself as a tech company. Consider data centers as well. How many data centers will you require for this AI build-out, specifically? This is the reason for this. These investments are being made for that reason. Are there any additional profits? Do these businesses stand to gain more clients as a result of these investments in the UK? Europe is a continent, to reiterate. The UK has distanced itself from the EU, which they have. Does focusing too much on the UK limit all of Europe's potential? It's not mutually exclusive, in my opinion. Really, this is only the beginning of what will be a much larger build-out. The secret is regulations, isn't it? However, you can see it everywhere. Take a look at what has transpired in the Middle East. The UAE and Saudi Arabia are witnessing it, and in the UK, we are witnessing the beginning of that. Additionally, that will spread throughout Europe. Okay, we are traveling all over the world. We are traveling to the UK from China. Let's return to the United States. Yesterday, you were in Washington, D.C. Nvidia has been on a bit of a roller coaster ride, and now it's adding to the geopolitical uncertainty. Initially, exporting its H20 chip switch were made especially for China. To China was prohibited. After that, it stated that it would be permitted to do so as long as it gave the U.S. government 15% of those profits. The FT is now reporting that Chinese regulators, the Cyberspace Administration of China, are warning Chinese companies not to purchase a particular chip called the RTX Pro 6000, which was created to essentially replace the H2O. Tens of thousands of orders are reportedly being placed for these chips. ByteDance, Alibaba, and other companies started testing these chips, but the CAC has now instructed them to halt and delay those orders as well. And see, all of this relates to the larger issue of tech independence in China. Frank Beijing is making a concerted effort to encourage its domestic companies to use more and more domestic technology. Examples of this include Huawei, which has created its own AI chips to rival Nvidia, and Alibaba, which I reported last week, was also developing a new generation of AI chips. There is therefore a lot of activity in that market. Details of a recent meeting between Beijing and some of those Chinese chip makers were also provided in the FT report. They gathered them all in order to evaluate the advancements made by Chinese chips in comparison to the Nvidia products that are sold in China. They came to the conclusion that, in reality, the performance is on par with, or occasionally better than what they are witnessing from Nvidia. Thus, the push from China to truly become more technologically independent is the larger theme here. Frank, that is creating a great deal of uncertainty regarding the future of Nvidia's market in China. Okay? London is where Arjun Karpal resides. Again, according to a recent Financial Times report, China's internet authorities advised the nation's largest tech firms not to purchase Nvidia chips. Nvidia stock is expected to decline by roughly 0.75%. Okay, let's speak with Craig Johnson, Piper Sandler's chief market technician, about this and a lot more. Good morning, Craig. Nice to see you. Frank, good morning. Okay, Craig. We do need to discuss the recent rumor that the Chinese internet regulator has advised those companies not to purchase Nvidia due to the company's enormous size and market dominance. How would your opinion of the market as a whole change if we saw Nvidia decline in value as a result of this report and perhaps some future pressure on the stock?